from Bloomberg's world headquarters in New York City, I'm Matt Miller.
And from our studios in Washington, D.C., I'm Kailey Leinz. Welcome to Bloomberg Crypto, a look at the people, transactions, and technologies shaping the world of decentralized finance.
Coming up, false alarm, a fake filing for an XRP-based BlackRock fund on a Delaware state website gives a brief boost to the cryptocurrency.
And the ETF waiting game continues. We'll speak to the CEO of the firm that will be providing the pricing for a lot of spot products, if approved.
Plus, we'll catch up with Mike Belshe, co-founder and CEO of digital asset custodian BitGo.
All right, so all of that is ahead. But first, let's get a snapshot of the market. The best way to do that on your Bloomberg terminal, CRYP-GO. And I'm actually going to start with the bottom of my board first, something I don't usually do. But we have to point out what's going on with AVAX, which, of course, is the token tied to Avalanche, up 19% on the day. This actually will be the best day for this digital asset on record. And this is on news that Apollo Global Management, JP Morgan's Onyx Digital Assets are all part of a big group, an effort called Project Guardian that's actually being spearheaded by the Monetary Authority in Singapore, basically testing out blockchain technology for financial institutions. And Avalanche is one of the blockchains taking part in that project. So you are seeing a massive move there today. Of course, XRP, a story we're going to get more into in just a minute, Matt. It on the day just up by about 1%, but a lot of volatility earlier this week on that fake ETF filing. And as for the big ones, Bitcoin and Ether both positive on the day. Bitcoin up by about 2.5%. We are back north of $36,000, Matt.
Yeah, I think the Avalanche Apollo tokenization story is really an exciting one. You may have noticed also that correlations have turned around of late. During the pandemic, whenever Kailey and I would report on rises in the price of Bitcoin, it was also tied to rises in stocks. That is no longer the case. You can see the correlation is now negative, and you'll have noticed a lot lately that when stocks are down, we see Bitcoin up. It's the biggest or most negative correlation, I should say, going back to the beginning of the pandemic, going back to March of 2020. So it's been a long time since we've seen these correlations break. We'll see if they hold. Kailey?
All right, always interesting to get a Bitcoin correlation chart map, but I want to talk about not Bitcoin, XRP instead, and turn back to that false alarm that triggered a double-digit rally in that token in particular. Joining us now with more is Bloomberg's Vildana Heinrich. So Vildana, just walk us through what happened here. This filing actually showed up on a state website.
It did. It showed up on the Delaware state website where you have a lot of companies filing for trusts, for example. And so a lot of it actually did look legitimate, except for that it was for XRP, and BlackRock very, very quickly said that the filing had been false. I think we're still trying to figure out what exactly happened. The state of Delaware did tell us that they did defer the issue and the matter to their own, the state justice department. So they're trying to also figure out exactly what happened here, because we did have that big, as you mentioned, run up in XRP, gave back the gains almost immediately after BlackRock refuted that. But it's just another instance of, maybe we can call it a hoax or fake news traveling through the crypto world, especially on Twitter, where things just spread like wildfire so quickly. Prices tend to move, and it's just the latest example of that. It's not exactly the very best look, because we do have regulators looking at potentially approving spot Bitcoin ETFs. And we know that in the past they've mentioned market manipulation and fraud as some of the reasons that they did not want to be approving them in the past.
Pretty creative comment,
very
I
interesting.
would say. Decent hoax there. In terms of filings that BlackRock actually confirms, they have obviously the Bitcoin ETF, spot Bitcoin ETF filing, and I guess NASDAQ filed for a BlackRock Ether fund as well. So what do we know about when these things are going to get approved? How much closer are we to, being able to tell which day Bitcoin ETFs are going to launch?
I can't wait to know what actually ends up happening.
You're tired of me asking you this question. Yeah.
You've asked this question a lot, but it is the big question right now. It's the point of most interest for the crypto community right now, especially, like I said, on Twitter, where people are sort of hanging on to every single little incremental development. And when we have news like the fake XRP filing, everybody just gets so excited. Hence, you see the price move. We're still trying to figure out what exactly happens with the spot Bitcoin ETF filings. BlackRock, we know, has a really strong track record in terms of launching ETFs when they put out filings, their ETFs actually do tend to launch. So that's giving a lot of comfort to a lot of people who are thinking this is a positive sign for the eventual launch of a spot Bitcoin ETF. But we really have to wait and see what happens, especially as regulators continue to look at some of these hoaxy events.
Right. All right. The Benzinga headline also was one that just drove Bitcoin crazy on ETF speculation. Vildana, thanks very much for joining us. Vildana Heinrich joining us to talk about that creative con. Joining us now is Sui Chung, CEO of CF Benchmarks. And Sui, thanks so much for your time. When do you think we'll see an ETF? And actually, I guess what's more important is how much institutional or even retail interest is this going to bring into the crypto world? Is it going to be an important milestone?
Great to be here, Matt. Thanks very much for having me. And I think you just hit that is the key question, is not so much the date, it's not so much when exactly that ETFs will launch, it's what will the impact be. And I think that you really touched on it right at the top of the show with the correlation chart, because that is really the key. That is the key reason for allocation to Bitcoin. I think for most investors, it is that Markovitzian free lunch that Bitcoin provides because of its diversificationary effects, because it has over the long run been uncorrelated to most of the major asset classes, very low correlation exhibited over the past 10 years. There have been periods where that correlation has gone up, as you rightly mentioned, in that pandemic era. But this year, for most of this year, the correlation has indeed been negative. If there has been any correlation at all. So that diversificationary effect that it can give and imbue to portfolios of stocks, bonds, cash, and alternatives is what's going to drive the conversation. That's what's going to drive the inflows. The question is, what is that allocation? Because the quantitative evidence, the empirical evidence tells us it shouldn't be zero.
It shouldn't be zero, but I've heard often in conversations, Sui, about this idea that really at this point you shouldn't be putting anything into crypto that you're not willing to use, and that would maybe suggest that it shouldn't be super heavily weighted in a portfolio in terms of that asset allocation breakup. It also, we have to keep in mind, comes against a backdrop of there been a lot of anticipation, to your point, about a spot ETF being approved eventually. Maybe it's a question of when, not a question of if, and I just wonder how much of that anticipation already is baked into what we're seeing in prices, and if ultimately what we see is, okay, maybe a little bit more institutional attraction, a little bit more volume in terms of flows, but pricing doesn't change that much. What do you think?
Yeah, that's a really interesting question, and I think people have been talking about, it's baked into the price, that authorization approval is baked into the price. And indeed, the approval may be baked into the price. But as you rightly point out, it's not so much the approval, it's how much inflow are these products, if they are approved, when they are approved, how much inflow will they see? That, what is the market pricing in? Is the market pricing in $5 billion of inflow, or is it pricing in $10 billion of inflow? We don't really know. And so I think that most investors will look at this cautiously. I don't think any institutional investors are going to be thinking about timing the market, timing a bump. What most institutional investors will be looking at is over the long term and the diversificationary effects that Bitcoin can have in their portfolios and add more resilience to the returns that they will see from their portfolios.
So are there any pricing problems today? I mean, this is one of the things that the SEC has warned is a risk with Bitcoin, that the markets are not as transparent, not as liquid, not as regulated as for other commodities. Do you see any issues now? I mean, that's the main work that you do at CF Benchmarks.
That's quite right, Matt. I think that it's important to understand that, yes, Bitcoin is traded in a distributed manner on many, many different markets. And those markets operated by cryptocurrency exchanges predominantly, they vary quite significantly in quality. There are some markets that have very limited AML KYC requirements, that have very limited market protection measures, fat finger protection, et cetera, and that's where you see the wilder price swings. Now, CFB produces its benchmark indices using data from the 6 most transparent, most conformant to our criteria, which cover those AML KYC requirements, those regulatory concerns, market surveillance and market monitoring measures. And so we at CF Benchmarks, in producing our Bitcoin reference rate and Bitcoin real-time index, we don't see those huge swings. We are able to protect ourselves from that data that may lack integrity, because we solely take pricing from those reputable, strong exchanges that have the track record and the regulatory oversight.
Well, and Sui, as we said, you're going to be providing that pricing to a lot of these products, assuming that they are indeed approved at some point. So my question to you is, have you had direct interface with the SEC about that? We know that a lot of these issuers are interacting with regulators as they try to sort out these filings, whether or not they'll be approved. Have regulators had questions for you?
Well, we don't comment on our interactions with regulators, whether we've had them and what transpires in them. But what I can say, and it's in the public record, is if those that are interested take a look at the S1 filings and then the amendments to those filings, the S1As that have been filed with the SEC, you will see ever more content, ever more disclosure around the manner in which CFB calculates, provides the benchmark indexes to the proposed products. And I think from that you can infer the type of the type of disclosures that issuers feel the market need for a public market product, and obviously some of which have been driven by suggestions from regulators.
Sui, great to get some time with you. Really appreciate the context. Sui Chung there of CF Benchmarks talking to us about the possibility of an ETF and the pricing climate in the industry. Coming up, BitGo CEO Mike Belshe joins to discuss the crypto startup funding landscape and regulatory outlook.
Well, and Matt, of course, a lot of that feeds into what we're seeing in terms of pricing. Taking a quick look at the price action here, you have Bitcoin moving even higher now, up more than 4%. 37,000 we're north of now. Ether up by about 2.2%. And of course, we've heard a little bit more on pricing from the founder of Skybridge recently. Anthony Scaramucci says this trend will persist amid the ETF optimism.
The deadline for that application, at least for the ARC application, Kathy Woods, is January 10th. It appears likely that these things will get approved. If that happens, I think there's an induction of a tremendous amount of demand for Bitcoin. And of course, you have a halvening in Bitcoin, which basically means the supply is going to get cut in half in April. So a halvening, lower supply, more demand. We think prices are going to trend higher for Bitcoin, Ethereum, and a few other currencies. And for those reasons, we're going to stay long in the portfolio.
We absolutely need to have a clear regulatory framework, because I think other jurisdictions are actually competing with the U.S. on innovation. They're trying to attract the innovation, they're trying to attract the growth, and they have a very comprehensive industrial policy where the regulators are aligned with the policymakers on that. But the other aspect, I think, about recruiting and about bringing innovation and supporting growth in the United States is making sure that we as regulators are catching up with the private sector.
CFTC Commissioner Caroline Pham at the Singapore FinTech Festival. Now, as she talks about needing a regulatory framework, Congress, of course, remains a long way from passing legislation on ways to tax digital assets, how the market structure should look, what the CFTC or the SEC should be in charge of. And of course, lawmakers have also been pressing to address other prevalent technologies as well, like artificial intelligence. Let's discuss all of it with BitGo CEO Mike Belshe. He works, of course, his company does, with over 1,500 institutional clients in 50 countries. Mike, thank you so much for coming back on the program. Of course, we often talk about how institutions might need to see a little bit more regulatory clarity to delve deeper into the digital asset space. But what else do they need to see?
Well, thanks for having me here. Look, they're looking for strength in the markets. They're looking to de-risk, the activities they're going to take. And obviously, with so much constant noise from regulators all over the world, they don't want to be on the wrong side of any of them. So they're looking for folks that are pioneering that, figuring out how the market structure should be. We don't have clear definitions, particularly here in the U.S., but it's getting better. Obviously, we've got the ETF that's pending. People are very excited about it. There's a lot of optimism around it. That's in part because we're starting to see some of these pieces fall into place.
You have 1,500 institutional clients across 50 countries for whom you are the custodian, right? So how much in terms of total crypto in dollars are you actually managing? And what do you expect that number to do after the ETFs are approved and start trading?
Well, we actually operate 4 trust companies today across the planet, and that's probably growing up to about 7 by the end of next year. I think we're the only kind of multi-jurisdictional custodian. We're going to start to see some new products and services we can offer. We care very much about making sure that we don't centralize the custody of these assets. We do hold a fair amount of the total supply of Bitcoin here at BitGo. So we want to make sure that that's distributed. This year, with the excitement of what's going on with the price and everything else, we've seen a significant uptick in new clients, over 50%. We see 20% growth in the assets staked. So we think there's a lot of confidence kind of in what we're trying to offer in anticipation of future growth. Bitcoin in particular does have this scarcity element to it, which looks pretty attractive to investors. It looks like we're going to have kind of a fixed supply with a number of events happening in the short term that should drive real price.
But if you, across those trusts, how much do you hold in total assets under management? And do you expect the approval of ETFs to drive that number up?
So we don't disclose our full amount. We've had, I guess we've done a few points. We had 68 billion of assets under custody back in, I guess that was 2021. It's down a little bit now just based on prices being down. You can see our wrapped Bitcoin that we offer, which is all public and on chain. So it's a significant number. The ETF is definitely going to drive more. There's been a number of estimates. Galaxy put one out a couple of weeks ago. I think they're anticipating somewhere in the neighborhood of $20 billion of new asset coming into the new purchasing coming into the asset class.
And of course, we're all just waiting to see when that approval happens. I'm glued to the headlines on my screen pretty much every single day, Mike. Now, you talked about how pricing was in a very different place back in 2021. Of course, there was a lot in the industry that hadn't happened yet, including the collapse of FTX last year. And that is something when we think about institutions in this space that maybe led to a little bit more trepidation, at least in the immediate aftermath. And I wonder how much that is fading now, especially given that I'm reading through the notes you sent across to us, and you're talking about BitGo's Go network and how that could prevent the next FTX. How can you say that confidently?
Look, we're all excited about the ETF. It's definitely getting closer. We're definitely seeing signals in terms of the conversations that the applicants are having with the SEC. BitGo's working with a bunch of these guys as well. So I'm optimistic, but I think it's quite likely we have another round of ETF rejections before we get the positive news. And it really comes back down to market structure. Gary Gensler's made no secret at this point. You have to separate exchanges from custody. The CFTC market structure is already this way. You have to separate exchanges from custody. The equities markets are this way as well. 15 months ago, we had Sam Bankman-Fried marching all over Washington, D.C., advocating his 7 key points of regulation, where he basically said, let me take on all functions. It's going to be great. It's going to be efficient. We'll do that. Obviously, we have a very different thought process on it right now. But a lot of these applications are with Coinbase custody. And Coinbase, while I'm not trying to say that they're an FTX by any means, they are taking on also kind of that same playbook. In addition to being an exchange and a custodian, they recently got approval for an FCM. Of course, they got a broker-dealer. What this means is there's a lot of risks in that entity that aren't fully understood. And I think that the SEC could quite likely come back and say, nope, you got to separate out these things fully before we're going to move forward. Good news, there's solutions right now of custodians like BitGo that focus 100% on that. We don't do trading and exchange work, so we can fill that void.
All right, I just want to point out, if Brian Armstrong were here, he would probably push back against having Coinbase, even in the same sentence as FTX.
Hey,
Mike,
they're running down the same model.
I'm sure you know.
FTX had.
I don't know enough about it to push back for him, but I'm sure he would have a multi-point rebuttal. BitGo CEO Mike Belshe talking to us about custody of the assets, Kailey, and it's a very interesting and very important issue post-FTX.
Absolutely. Now, Matt, just taking a quick look on prices here. Bitcoin continues to climb throughout the session. We're now up 5%. And interesting to see that as we're seeing the equity markets rolling over. The NASDAQ 100, in fact, now negative on the day. So we'll keep an eye on that for you. Coming up, though, we have a few more stories to run through, including the SEC collecting a record amount of fines from crypto businesses in this fiscal year. More ahead. This is Bloomberg.
Some crypto stories that caught our attention. A consortium of 17 companies, including Apollo and JP Morgan, are testing the blockchain's impact on financial institutions. The project's goal is to record funds onto an asset manager's choice of blockchain, tokenization. The proof of concept initiative could generate up to $400 billion in revenue, according to Christine Moy, partner and head of digital assets at Apollo.
And the SEC says that it has collected nearly $5 billion in fines and returns from businesses during the fiscal year ending in September. The regulator highlighted its actions involving digital assets, cybersecurity, and Wall Street employees using unapproved communications to conduct business. The SEC's focus was on crypto, and it was prevalent throughout the year, which included suits against FTX, Binance, Coinbase, and others. And of course, we'll continue to follow all of those regulatory actions here on Bloomberg Crypto. But from the entire Bloomberg Crypto team, Matt, we have to acknowledge this is likely our last show with you for a while. You have another baby on the way. We're going to miss you very much, but we're all really happy for you and your wife and Edna, who's going to be a big sister.
Yeah, thanks very much. Very much looking forward to the arrival of Lola. And when she does come, of course, I'll be there for some skin-to-skin and father-daughter bonding. I'm really looking forward to it. I'm even going to shave the beard for that so that I can give the baby smoother kisses, you know?
That's a good dad right there. Well, we'll miss you very much, Matt, but we'll look forward to your return when you're back from leave.
Coming up next Tuesday, SEC Commissioner Hester Peirce joins the show, and maybe by then we'll have a Bitcoin ETF approval. As we speak, the price rising to $37,239. This is Bloomberg.